And so I always say that money, the economy, these are all brain issues, right?
Oh, yeah.
And I know people who will double down and say that lack of money is actually like a brain disorder. Today's guest is Hansome Kelly. He's a day trader and a financial coach. His company, Financial Vortex, works to bridge a gap between financial ignorance and financial literacy with a mission to help 100 million people reach their financial goals. Hansome's expertise has been trusted by Yahoo Finance, the 411 on Wealth, and many other media outlets. He has quite the story, so we'll talk a bit about that for those of you who are just starting your wealth building journey. But he is really here to help us uncover what is needed to shift that money mindset we all struggle with and begin the unlearning of what we're taught about money. And welcome Hansome Kelly to Surviving Your Brain.
Thanks for having me.
So Hansome, I don't know if you know this, but you are one of my go-to people when it comes to money.
That's great.
Literally Grant Cardone, Robert Kiyosaki, Brandon Dawson, and then Hansome Kelly.
That's a great company.
So I'm really excited to have you here today.
Thanks for having me.
So you're a day trader.
Yeah.
Right? So how did you get into day trading?
I got into it by accident. So growing up, I wanted to be like Warren Buffett, right? Which was the richest person at that time. I understood that he got his money into the stock market. So my whole thing was to, when I grow up, I'm going to have money. I'm going to get into the stock market. So fast forward, I understand obviously you need to have capital to go about doing so. So I got into network marketing. So by me network marketing, that was my way of getting some money so I can go into the stock market. One of my uplines in network marketing, he was actually posting charts that dealt with Forex trading. So I was confused about what it was because like the ticker was like USD/JPY. And I'm like, that's not a ticker in the stock market. So I actually asked him, what is that you're doing? He said, trading currencies. And I said, what is that? He said, he's trading Forex. So from there, that was my actual introduction into day trading.
So you mentioned how you made a lot of money early on.
Yeah.
You even say that you got lucky and then you lost a lot of it. Can you tell us a little bit more about that?
Yeah, it was more of rookie mistakes, right? So like what I teach my students to not do, I was 100% doing all of that, right? Which is chasing greed, FOMO, which is, fear of missing out, right? So I'll see price going up. I think that I have to jump in, price going down, I have to jump in as well. That's not what you want to do, right? You have to understand that like at the end of the day, you're going to always have another opportunity. Now, unless today's like the last day to go trading, then it's like, screw it, go all in. But you don't want to do that, right? So wait for your opportunity to present itself. And then once you're present, now you can actually execute what you're taking your position. So I wasn't doing any of that. I wasn't doing that. I wasn't being disciplined. I was following no plan. I was literally just winging it. And sometimes I'll win. And because of the fact that I'm winning, I'm like, hey, I must be really good at this if I'm winning. But no, that's not how you win long term.
Well, it's funny you mentioned that because I saw something on your social media recently.
Yeah.
Where one of your students, I think, made like over $10,000 in a day.
Yeah.
Right. But you sort of chastised them. You're like, you didn't do this the right way.
He pissed me off.
And so you use that on social media. You use that, as an opportunity to essentially give a lesson about what he did wrong, even though he made a ton of money that day.
Yeah, he pissed me off with that. And again, the reason why, because it was pure greed, right? Now, we have the ability to make how much is more any single day. However, it doesn't mean that every opportunity to enter the market is your opportunity, right? So it's like at some point, and I told him like, bro, be done for the day. So I think at that point he was up like 7 to 8 grand around that time. And he said he's done. He got back into it. Again, it was emotional trading. He wasn't following his plan. He was letting greed get to him. He just so happened to make more money by staying in, but it was bad trading. And you don't want to do that.
So when you lost your money, and just be honest, how'd you blow the money? Was it like clothes, jewelry, sneakers? I
made sure that everyone who should not have a good Christmas had a great Christmas, like legit, every single person. And it was bad. Like I remember I traveled to Atlanta, which we're currently right now, to see my nephew. It was like the day before that, I bought him, I think, a PS4 at that time. And so like stuff like that, I made sure every single person just was taken care of. And you don't want to do that, especially when you're growing up and building up.
So what did you learn from that scenario?
You have to make sure that your house is built correctly first before you can build some other house. So if your house is not built correctly, your foundation is not set, you're going to be asked out.
One of the things that I talk to my clients about and patients about when it comes to money is having a money mindset.
Right.
And usually I highlight 3 things for them. The first thing is that you want to have a completely different relationship with money, right? A lot of people are scared to look at their bank accounts. A lot of people tell themselves a lot of negative things about money. I tell them that they want to have positive affirmations every single day when it comes to money. Then I also tell them that they need to be grateful for what they have. So what are the kind of things that you've had to do to shift your money mindset?
I mean, for starters, you have to look at money as what it is, which is a tool, right? So I feel like those who don't or aren't aware of like how much money is coming in is very ignorant, right? And I want to say that loosely, but just be honest with that. If you don't know how much is coming in and you don't know how much is going out, you're going to forever be in a rat race. And I don't just mean rat race when it comes like a 9-to-5 rat race. I mean rat race literally within yourself, right? Or let's use a better term, a hamster on a hamster wheel, right? You're always going to be in a circle. And it's funny because on social media, you see a lot of people like they'll have posts like, Apple just took $9.99 out of my account today. How does this happen? It's like it happens every single month, the same exact day. Like you have to be aware of these things, right? So it's like not being alert of how much money is coming in, how much is going out, or the exact dates is not going to be beneficial. And then back to what I was saying about it being a tool. Again, that's exactly what it is. It's a tool, right? So like banks use it as a tool. We use it as a tool, right? We may not think we do, but we actually do. Regardless of the wealth class that you're in, it's a tool, right? You go to your 9-to-5 or your job, you make your income, right? You get your paycheck. You use that to progress your life. If you want to go travel, if you want to go on brunch, if you want to go buy clothes, regardless of what it is, that's your tool. However, what you want to use it for, you want to use it to build your wealth so you can use them assets from that, the gains from those assets to actually do the things you want to do. So let's say if you want to travel more, if you want to buy more clothes, right? It's smart to invest first and then use those gains to go and then travel and do all the things you want to do rather than do the opposite way.
So has day trading allowed you to use money as a tool?
Oh, absolutely. Yeah. So I don't see money as like I have to work X amount of hours to get this much money, right? So again, as a trader, you do see money differently. It comes a sense of like what has to get done for me what opportunity has to be executed for me to make X amount of money and so forth. Or how do I have to increase my risk to turn around and make X amount of gains and so forth?
So do you think anybody can be a day trader?
That is a very great question.
And I've got an answer for this, but I want to hear your answer first.
You know, I want everyone to become a day trader. I don't think that everyone has the willpower to become a day trader, because to become an actual profitable day trader, you have to be disciplined, and not many people want to be disciplined. Not many people want to follow a plan, which is ironic because they subconsciously still follow a plan, right? But not everyone wants to do that, and not everyone wants to become a better version of themselves. So to answer your question in full, it sucks, but no, I actually don't think that everyone should become a day trader. They can, but I don't think they should.
Yeah, I mean, I think that anybody can learn anything that they're passionate about.
Agree.
But my response to that is hell's no. There is way too much anxiety with day trading or the market. I mean, the market is completely based on people's moods, I feel like.
To an extent, right? Yeah.
And their sort of fear about what's going on with their money. And I see people every day who suffer from anxiety. I cannot imagine some of my clients and patients day trading.
But here's the thing. So to go back to that, I get where you're coming from, but that's also learned behavior. Like you learn that. Like same thing with trading. We learn to like, if we're losing money, it's like, oh, we're going crazy. But in reality, you only get anxiety because you're over leveraging yourself or you're risking too much, right? Now, let's say if I'm in a position and I know that I'm risking $100, right, on this position, I'm okay with that. So psychologically, I tell myself, okay, I might lose this trade. So I might lose $100. However, if I'm in a position and I don't know what I'm risking, let's say I'm now down like $500, I'm going crazy because that's way more than I wanted to risk. So that's also a learned behavior. We don't think about it that way, but that's a learned behavior that I'm losing more than I'm willing to lose.
Well, I'm really happy to hear you say that it's a learned behavior. So what are some things that you've had to unlearn?
Oh, man. For starters, it's following a plan. Right. And understanding that every day is not going to be your day. So like I like to look at trading from like a basketball point of view. And the reason why, because like in the NBA, right, let's do that season. They're not going to win every single game. Right. Same thing with trading. You're not going to win every single trade. You're not going to win every single day. However, your goal is to win a championship, which is, overall success. Same thing with NBA players. Like their goal is to win a championship. You have to understand and be alert and accept that I may not win today. I may not win this week. However, overall, I'm going to win. So you have to understand that like I'm going to lose some trades and that's okay. The hard thing about it is that accepting that I have to walk away with taking an L today. That's hard to accept. But once you accept that, it becomes a lot easier.
Yeah, I think that's really hard for people. And I want you guys to hear what he just said. You are not going to win every single day. It's something I tell patients all the time. You're not going to feel 100% every single day. Doesn't mean that you need to come and see me, right? Right? Because it's just the way that life is, right? And I think day trading, that's a great example. You're not going to win every single day.
No,
and you need to learn how to manage those losses. Right?
Yeah.
So specifically when it comes to money, what did you have to unlearn?
Well, for starters, I have to unlearn that money is a tool, right? So understanding that at any given moment, I can make this much money or I can execute and make money, but it doesn't mean that that is my opportunity to make money, right? So like sometimes I had to be patient, and that is another thing as well. I feel a lot of traders, myself, let me just go back to me. You have to learn that you have to be patient, right? So sometimes that means that I'm sitting on a computer for an hour and a half and literally just watching the charts. Or sometimes that means like maybe for the entire day, it's just like, it's not really moving the way I want it to. So it's like, well, there goes a wasted day in the markets, but I didn't make any money. So it's just understanding that got to be patient, got to let the money come to you, let it show, and also understand that it really is a tool.
And so what about your clients? What do you find that they need to unlearn when it comes to money?
The biggest thing that they need to unlearn is that you are going to lose money. Like 100%. So again, as I said, like when you're starting off, nobody wants to lose money, especially like when you go into the market, this is your hard-earned money, right? You work your job, hard-earned, you put it into the market. You don't want to lose it. But that's also the reason why people lose as investors, because they continuously look at their portfolio. If it goes down even $1, they're ready to freak out, right? Same thing with trading. You look at your trade, if it goes down like $1, you're freaking out because nobody wants to see their money lose. However, you have to understand that that's part of the game. Right? It's like the job description it should really say job description of the trader. The first thing says you're going to lose money.
Yeah.
But it doesn't say that. It says you're going to make money. So it should be opposite.
Yeah. And so I always say that money, the economy, these are all brain issues, right?
Oh, yeah.
And I know people who will double down and say that lack of money is actually like a brain disorder, right? Because you do have to unlearn what you're taught in society about money.
Right.
So I'm sure a lot of people listening to this will think, oh, yeah, I use money as a tool. I use it to pay my bills. But he's talking about using it for a completely different reason, right? To sort of invest so you can make more money
100%.
in the future.
100%.
Just want to shift gears a little bit and talk about the current economy, because we are in a really interesting time when it comes to money, right? A lot of people will say we've been in a recession.
We have.
At the very least since last summer.
Before that.
Right. And we just witnessed a bank collapse.
A few.
So what do you think is going on in this economy?
Right now, the Federal Reserve, right? That is our central bank. Right now, we are literally trying to avoid the collapse of our banking system. And it's day by day, things are getting worse and worse. So what really going on right now is like, what's the saying? How can I kick this can down the road so I don't have to deal with it right now? And it sucks because even as politicians, right, they all do this, right? Like they come in, their term is limited, right? So they understand as like, all right, my job is to make sure that I look good while I'm in office. So by doing so, they continuously kick the can down the road. So the financial crisis that we should have been experiencing is just continue getting worse and worse. Why? Because it's going to kick down the road.
Hey guys, thank you for listening to this episode. If you want to know the next steps that you can take, then you definitely want to check out my online course, Take Charge of Your Brain. When I think about this course and think about some of the testimonials, I think about the guy who was finally able to put out his very first music album. I think about the people that have been able to overcome health challenges as a result of being in this course, or people who are able to start their own businesses as a result of being in this course. I even think about somebody who was finally able to get pregnant, have the family of her dreams because of what she learned in this course. This course is going to be transformative for you. Here's a secret tip I have for you. Success in health, in business, and in life starts in your brain. So take charge of your brain today. I'm looking forward to seeing you there. Now back to this episode. And here's why I say that, look, this is, when it comes to the economy and money, sometimes you can consider it like a brain disorder.
Yeah.
Right? Because we have learned specific things when it comes to money. We have been programmed when it comes to what we should do with our money, how we should save our money, how we should trade our time for money.
Mhm.
And I think one of the things that we are learning right now is that a lot of that stuff doesn't work well and doesn't work the way that we thought it did.
Right.
So one of the things that a lot of people are starting to realize is that your money is not even in the bank when you deposit it.
It's not.
I think that's a big shock for people.
Yeah.
Like they think, oh, I put $10,000 in, I can go take $10,000 out.
Yeah.
But that's not how it works.
No,
tell
it's
us a little
not.
bit
So
more?
funny enough that like when '08 crisis happened, right? People rushed to the bank, they tried to take the money out. It was really like a pause on how much you're able to take out, right? And that's when people were to alert and they realized, wow, like my money is not actually in the bank, right? So at that time, it was about 10% that it actually can hold at any given time. 2020 happened. It was around middle of March, right? And again, a lot of people still don't know this because again, the Fed, they're not going to come out and say, hey, you can put your money in the bank, but it's not going to be there. Like if someone says that to you, you're going to automatically go take your money out, right? But during March in 2020, they actually made it in which like they're no longer allowed to keep any of your money within the bank at any given time. So how banks actually work is just like this. It's also a business. People forget that. People think that a bank is like, it sets to have your money protected to an extent, right? But again, it's also a business. So the business has to make money. So how banks work just like this. Like you deposit money, right? They're going to take your money and they're going to go give out loans, right? And that's how the banking system is based off of loans. So they're going to go give out loans. And how they give out loans and they get paid is by interest, right? So let's say if someone's credit score, that also varies, what your interest is going to be as well. But it can vary. But let me go back to what I said. Let me not go all off track. So the banking system works like this. You deposit your money, right? They take their money, they go invest in someone else. If they want to get mortgage loans, they want to get credit cards, et cetera, whatever it is. They're banking off of the fact that that person is not going to pay everything back in full, that's always the case, right? So let's say let's do mortgage, right? So you put down 20% for the house. Your mortgage is let's say 10%, right? Mortgage is 10%. You're not paying your mortgage in full, right? If your house is $700,000, you're not paying $700,000 all at once. So let's say you have a 30-year mortgage lease. That right there, every month that they're banking on that's the percent of it of the increase. That's how they're making it money. Now, again, going back to what you're saying, if you want to go take out your money, there's a reason why you have to call the bank up. And that's a large amount, right? If it's like a few thousand, that's different. But you have to call the bank up and say, hey, I want to go take out $10,000. Can I come in tomorrow? And they're going to say, well, you come in on Tuesday. And you're like, well, I need my money tomorrow. And they're like, well, we'll have it on Tuesday. The reason why is because they don't actually have your money set. They put their money into treasury bonds again because they want to create assets. So in the case of you do need your money, they can come back and give it to you.
Well, it's funny. I was talking to my sons about this,
Yeah.
And telling them about how the bank does not actually keep your money in it. And they were like, well, do you have money in the bank? I was like, yeah. They were like, why? You're a brain guy. Why would you fall for this? And I'm like, that's how I grew up.
Yeah. We're conditioned that way.
Yeah.
Because again, like it's the American dream is to have a nice house, right? Which is debt, right? You want to have a nice car, which is debt, right? You want to make sure you have your 401k, all your money set in banks, which again is like, that's what we're sold. And because we're sold and we're programmed that way, we think that if we don't have that, we're less than. But in reality, you're not less than, right? Like we shouldn't be. And we are a society that's built on debt, but that doesn't mean that we need to have debt just to make our lifestyles great. And I actually don't recommend it.
So how do we go about unlearning all of this stuff that we've been brainwashed with?
Well, for starters, you have to be alert to your numbers, right? So like a lot of people, they don't know what the numbers are. So once you're alert to your numbers, now you have an understanding of like, okay, am I underwater? Am I above water? Once you have that set, now you have to be aware, okay, what can I do to keep myself above water? Because nobody wants to actually be underwater, right? So then you have to just brainstorm. Like you think about, keep things simple, budgeting yourself, right? Little things like that. You can invest your money into S&P, right? Those things as well, index funds. These things are going to help you really propel yourself moving forward. And I think that's the most simplest way that our listeners can actually take advantage of that. Again, first understand where you're currently at, right? Understand your current debts. Understand if you're underwater, if you're above water, and then just make necessary changes. If you're underwater, cut out some things, right? You may not need to go out every single week. You may not need to go to that vacation. You may not need to do these little things that you may feel comfort in. And it's okay to feel discomfort now to be comfortable later on. And I think a lot of people, they don't want to accept that, right? Same thing I was saying as a trader. You have to understand that sometimes you're going to lose, which is uncomfortable, right? But once you accept that I'm going to be uncomfortable today to be comfortable later on, it gets better for you to actually grow.
So with everything going on, Where should people be putting their money if not in the banks? Or do they still keep some money in the bank and just start to invest it in different areas?
Well, the best thing to do is to keep your money on the mattress like we did when we were younger.
That is not the best thing to do.
It's not the best thing to do. I think that you should have you should have cash, especially things going on. You want to make sure cash is set aside for you, right? That doesn't mean that you have 95% of your money in cash, right? You want to have a good 30% in cash. You want to have that set. Tangible assets, physical assets as well. With gold, you want to make sure you own gold, silver. These things are safe havens against the dollar because the dollar is going to crap.
Yeah, weaker and weaker, yeah.
Yeah. You also want to have that set. And then again, the S&P is a great investment. However, people have to realize and understand that because you invest into the market, that doesn't mean that the market is always going to give you a return, right? Like in 2022, last year, we did not have a return in S&P. It was actually negative. That doesn't mean that it's not a bad investment. You just have to understand that if I'm going to invest this money, right? Let's say $100. I'm going to use that example. If I'm going to invest $100, I have to be alert and accept that I just lost this $100. If you can accept that, investing right now is not for you. And that's okay, right? If that large amount is not for you. But however, you do want to have some money into the market because at the end of the day, the market is also a hedge against inflation. The reason why I'm saying that is because, again, as the economy weakens and people think the economy and the markets are the same thing, but it's really not. And for some weird reason, 2020 showed us that it's not the same thing, but people still think that it is, right? There's a reason why we had a lot of people lose their jobs. However, during 2020, we had a lot of higher highs with the market just making all-time highs, and that was the case. So I just recommend, you put your money in the market. You put some of it towards a high yield savings account. I recommend anything from they range around 3.6% at the time of recording this, 3.6%. So you want to go that route. I don't recommend having an actual savings account with a bank because they're giving you 0.06%. So it's 0.6% compared to 3.6%. That's a huge difference. So make sure you do that. Make sure you have tangible assets, physical assets like gold and silver, and then have your cash to the side.
See, but I think there are going to be some of you watching this and thinking, well, to invest in the market, to invest in real estate, to invest in gold, those are things that millionaires do. Those are things that people with a lot of disposable income do.
Right.
What about people who only have $100 extra per month or even $50 extra per month?
Well, for starters, you got to remember too, millionaires, they aren't just born rich, unless you're actually wealthy, right? But some who actually, also, there's a majority of millionaires now, they're quote unquote self-made, right? I say quote unquote because no one's actually self-made. We all rely on everyone else, right? But besides that, though, they have to build their way up to wealth. Same thing with you. You got to start somewhere, all right? Back to the MBA. No one is just born an MBA, right? You have to learn that skill set, put the work into it. Same thing with money. Learn the skill set. But to answer your question in full, with somewhere like $50 or even $100, again, I first recommend the first year investment needs to be into yourself. Right? You have to look to see, where am I currently at? Am I underwater? Am I above water? Once you have that set, you're aware of that. Then let's say I'm above water, right? Now you have the extra money coming in. Now you can invest into different things. You don't want to invest into real estate when you have $50, right? But if you want to invest into the S&P 500, that's a great way to go into. I also recommend investing into companies that are going to be there long term, right? Disclaimer, Apple would be one, Microsoft would be one. That, right? Everything going on, these are companies that are going to propel for the long term. So those things that would be best.
So you mentioned investing in yourself. You mentioned building some skill sets up. And I know that you've got your course and training program.
Yeah.
So why don't you talk a little bit about that?
Well, that's another thing as well. I do recommend my course. However, my course is not for everyone, right? Going back to the question we mentioned about trading. So if you're not someone who's disciplined, if you're not someone who's trying to better yourself, you're not someone who's trying to follow a plan, then it's not for you. However, if that is someone who you are, then yeah, this is definitely going to be something that's going to be beneficial for you.
And what is it that you teach in your course?
I teach everything when it comes to financial literacy, right? So I also obviously show you how to trade the markets. And however, I also show you when it comes to trading markets, what to do with your money. Because it doesn't matter if you're making $1,000 a day. It doesn't matter, right? If you don't know how to manage your money, you're going to forever be poor, right? So once you understand, okay, now that I made this money, how can I manage it correctly? Right? So I first started with the psychology of money. And then from there, I started the psychology of yourself, right? So a little bit of you going in the brain and that aspect of it. And then once you have that set, now let's get the skill set needed to actually grow your money, especially coming to the markets.
So when it comes to managing your money and managing yourself, what does that really look like for for some of your clients?
Well, it looks like having a plan for starters, right? Because again, as I said, we psychologically have plans set. Like when it comes to we go to work, right? We wake up at like 8 a.m. on Monday, or not 8 a.m., but let's say 6 a.m. wake up on Monday. We make sure we have to beat traffic, or we have to, be in traffic for a certain amount of time frame. We go to work 9 to 5. We come home, we have dinner with our kids, or regardless of what it does, we have that set schedule, right? And then when it comes to the weekends, we just do whatever, right? We wake up, party whenever, have no really set time when we come home. And then we just know that on Sunday, we have to do it again. That right there is a plan. Right. So psychologically, we follow a plan. But when it goes back to the markets, we think that we don't have to follow a plan. But all that is just FOMO. So like I'm teaching you how to avoid that. I'm teaching you how to avoid FOMO, how to actually become a more disciplined person, how to go about following a plan. Once you have that set, the sky's the limits.
What are some of the biggest mistakes that your clients make?
Thinking that they're going to get rich tomorrow. So on social media, you see it. Everyone is this rich trader, living this whole lifestyle, but that's not necessarily true, right? So it's like if you can't sustain, and another thing as well, you can really if you just pay attention to people telling themselves, people just don't pay attention because they look at the short-term aspect of it rather than the whole long-term view. But back to what I was saying, so just understanding that it's not going to happen tomorrow. So if you can accept that it's not going to happen tomorrow,
a lot of people's hearts right now.
I am, and it needs to get broken though,
because if I'm investing in the stock market, I want to make my money back.
Well, no, you're going to eventually make your money back,
but
right?
I want to make it back quickly.
No, and that's the thing. So there's no such thing as a get rich quick scheme. If someone is telling you you're going to get rich by in 90 days, whatever, just run away. Take your money somewhere else because it's just not going to happen. And I feel like 2020 spoiled us because especially invested in market, you couldn't lose, right? You put $10 in there, next day is $50. That was it was unprecedented times. But let's go back to reality with how things were. That's not going to happen, right? So you have to understand that it's going to take time. I don't care if you want to get rich by next week or if your bills are due tomorrow. It's not going to happen. So it's by you putting yourself in that position, thinking that's going to happen by tomorrow, you're just going to make things worse for yourself because now you're telling yourself that I need this to happen tomorrow. And if it doesn't happen tomorrow, you're just going to make poor decisions.
Are you still learning?
100%. It's an ongoing, I'm an ongoing student, right? Because if you're never going to know everything you need to know, right? Even where I'm at, I'm still learning. I'm understanding, okay, how can I have done better? Even my losses, what can I have done to avoid that type of loss, right? And then another thing as well, my risk is increasing, right? So obviously the more risk I have, the more money I'm making, but also the more money I'm losing. So it's also being able to accept that, right? So it's at one point you're accepting that I'm losing $100 today, right? Now you have to accept losing $1,000 today. Now you have to accept I'm losing $10,000 today. So it's accepting that as you're going forward, it makes you have to become a better person.
If you lose $1,000 today,
yeah,
how does that go over with your wife?
I can make it back tomorrow. So
that's okay. You can pay the rent. You're good.
Yeah, she'll be fine.
Yeah. Okay, good. Well, how are you investing in yourself?
Well, that's a very great question. I'm actually investing into my brain, which you go back into it though. But again, just understanding what can I do to become more disciplined? What can I do to have a better time management? That's when my wife comes into it. Then from that aspect as well, what can I actually do to just become better overall?
Yeah, one of the things I talk to people about all the time is that life is all about evolving.
Right.
And you have to constantly be learning. And when you stop learning, that's almost akin to death when it comes to the brain. So I think the fact that you're constantly learning, you're teaching your clients to learn, that's really important.
Thank you.
So where is it that people can find you?
Well, you can go to hansomekelly.com. That's my website. On Instagram is @hansomekelly_. There's plenty of fake pages out there. So just remember, I'm not going to DM you. I'm not going to ask you about money to trade your money as well. But if you want to find me, everything is @hansomekelly_ or just my website, hansomekelly.com.
Awesome. And I want you to leave everybody with just 3 tips, 3 things that they can start doing today to sort of bridge that financial literacy gap.
Well, the first thing that I recommend you guys do is to be alert of your numbers, right? So what that means is literally go to your bank statements, right? Go to your credit card statements, look at your bills, figure out exactly when you have certain due dates, right? Because you don't want to miss payments and you don't want to miss your bill as well. Once you figure out your actual due dates, you have to be alert and understand, okay, I get paid every first of the month, right? So I know that by the 5th of the month, I need to have X amount of dollars to pay for this bill and that bill and so forth. Once you have that set and you're aware if you're above water or underwater, then from there, you can make decisions to want to be best to go about how to move forward with your money.
That's going to be scary for a lot of people, just to look at their bills, just to look at their bank accounts.
I think that the reason why a lot of people don't want to do that is because it's very difficult to accept where you're currently at, right? Because we want, obviously, to become better versions of ourselves, but becoming a better version of ourselves meaning that we have to be vulnerable with ourselves. So you have to say, yo, I suck right now. And it's okay, right? It doesn't mean you're going to suck for the long term, but if you suck right now, you with your money, you can still do things to change for the better. Now, if you suck right now with your money and you continue doing those things that allow you to suck with your money, then you're just like, you're insane.
Yeah. So it's all about evolving and learning.
Right.
Which I think you sort of make a great point in terms of just pointing that out throughout your course and throughout this conversation that we've been having. So I really want to thank you for being here.
Thanks for having me.
Thank you for flying out here to be here. So Hansome, thanks so much.
Thanks for having me, man.
All right.